Which one is the best Bill Ackman stock to buy? Lowe's or Hilton? Of course, Bill Ackman of Pershing Capital Management owns just six stocks in his portfolio, and Lowe's is his largest holding at 23%, and Hilton is at 14.4%. So in this video, I'm going to answer which one of these two stocks is the best Bill Ackman stock to buy. I'm going to compare these two stocks across four different metrics. So let's get right into it. Starting with revenue. Looking at revenue over the last several years, Lowe's has demonstrated very nice growth from 2019. Of course, the company got a boom during the pandemic as people spending more time at home looked for home improvement projects. Meanwhile, Hilton Worldwide Holdings, unsurprisingly, revenue crashed at the onset of the pandemic, as one of the last things people wanted to do during the pandemic was get on a crowded plane to travel somewhere. So travel nearly came to a halt. These two companies are somewhat opposites, right? During the pandemic, home improvement boomed while travel crashed. And now that economies are reopening, travel spending is rebounding with a vengeance. Although home improvement is not crashing, home improvement spending is not crashing. It's slowing down. Yeah, it's slowing down, but it's not crashing the way that travel crashed in at the onset of the pandemic. So now you're seeing that for Hilton. Look at this rebound in revenue, up to 2.44 billion in the most recent quarter, almost back to the peak before the pandemic, but travel is not yet recovered. It's got more room to go. Before the pandemic, people spent, I should say, $1.5 trillion on hotels and resorts in 2019. In 2022, that figure was estimated to be 1.1 trillion. So it recovered in 2022, but it was still $400 billion below where it was in 2019. So there's a lot more room to go for this travel recovery, this travel rebound, and Hilton Worldwide stands to benefit from that trend. The next metric I wanted to look at is the operating profit margin over the trailing 12 months. And Lowe's has done a really nice job growing its operating margin, especially during the pandemic. But even in the trailing 12 months most recently, 10.47% is pretty solid. But Hilton is way ahead of that, more than double that rate at 23.87% in its trailing 12 months. Even though its revenue is just barely at the same place it was in 2019, its operating profit margins are much higher because the average room rates are much higher. Hilton has increased prices, and Hilton is not alone in travel companies that have raised prices, but they're charging more per room, and so they're able to generate more revenue off of each room and more revenue from each hotel, and therefore increasing its profit margins overall. The next metric I wanted to look at was cash flow from operations to sales over the trailing 12 months again. And again, in this metric, Hilton showing superiority over Lowe's in its margin of 19.16% compared to 8.85% for Lowe's. And even before the pandemic, if we were looking at 2019 levels, you know, Hilton had the advantage over Lowe's. So it's at normal rates, its margins are higher than Lowe's. Although during recessions and during significant pullbacks, you can expect Hilton's margins and cash flow margins to decrease more so than Lowe's does, because Hilton's business is more discretionary compared to Lowe's. So during a recession, people pull back on spending on travel more so than they pull back on spending on home improvement, because home improvement, some of that spending is more necessary than travel is, right? Some home improvement projects, you don't have the option. You have to fix it. You can't say, "Oh, well, I'm going to delay that." And finally, I wanted to look at their valuations to determine which one of these is the best stock to buy. And looking at the forward price to earnings ratio, Hilton Worldwide is trading at a forward PE of 25, while Lowe's is trading at a forward PE of 14.49. So, while Hilton was performing better than Lowe's in terms of operating margins and cash flow from operations, that's reflected in its valuation. It's more expensive. Still, I would prefer to pay the premium price right now and buy Hilton Worldwide instead of Lowe's. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would prefer Hilton, so I would say that Hilton Worldwide is the best stock to buy between these two right now if you're looking at the best Bill Ackman stock to buy. I think the recovery in travel spending is just getting underway. I think 2023 will be another recovery year, and I think 2024 will be another year of recovery. I don't think it's going to be finished in 2023. I think consumers have a lot of pent-up demand for travel after being cooped up at home for a little more than 2 years, and I think that needs to get out of people's system, and it's going to take a couple of years to get it out of our systems. So for that reason, Hilton Worldwide is my choice for the best stock to buy between these two. Alright, that's all I've got for this video. Thank you so much for watching. I really appreciate your viewership. If you like this video, I'm going to link to a couple of videos at the end of this one that I think you will enjoy. So please click on one of those and I'll see you over there.